welcome everybody. For those of you folks that are returning, my name's Heather Dries, Director of Funding, and I have my colleague along here, Eric Bergman, our Investor Relations person. So we want to thank all of you for joining us. I know we see some familiar names on the list, so for those of you that are returning, we thank you. For those of you that are new, you are attending the Impact Investment Forum podcast. So we're super excited. I think this is our, fifth podcast we've done?
Oh, at least.
Yeah.
5 or 6.
Yeah, we're professionals now. So,
I mean, we got it down.
But we're super excited. We've got some very exciting news today, and we also have a guest speaker. So we're super excited about that too. But to get to the exciting news, I know that a lot of people have been waiting for this, not just within our company, but outside of the company. But we are here to announce that our Circle of Wealth Fund 3 is officially open and available for contribution. So it's been a long time, right, Eric?
A long time. This is over a year in the making. A lot of money, a lot of time, a lot of sweat. It is a culmination of a lot of effort from a lot of people to finally get to this moment in time to where we can bring what we do here at Secured Investment Corp on a daily basis. We can bring it to the general public.
Yeah.
Finally.
Yeah. We're really excited about it. Our legal team, down to our marketing, to us, have been working on this since last December. So it's been a long process, but it's exciting. I think it opens up a ton of opportunities. We're going to talk more about this in the podcast, but there's a lot of opportunities to our students, our clients, our investors that haven't always been able to go into a fund environment. Right. So we're going to speak to that a little bit. But first, Eric's going to give us a little update on the market and what's going on in the current markets right now.
Yeah, and we have so much going on in this podcast today. I'm not going to spend a ton of time talking about the markets. The S&P 500, the Dow Jones, and the NASDAQ are all still hovering around that 20% gain year to date across the board. We had a big push in oil. A couple days ago, you probably saw that oil ticked up 15% in one trading session. Crude oil did. That's a very large move in one day for oil. Obviously, there was the bombing in Saudi Arabia, which shut down approximately 50% of their output. It seems like markets have since pulled back a little bit and calmed down. But that's obviously something to be mindful of. Interest rates have ticked up a little bit. Yields have ticked up across the board on the treasuries. The Fed is meeting today at 2 p.m. Eastern time. The general consensus is we're going to see a 1/4 point cut. Pretty much across the board, everyone's in line with that. I don't necessarily agree with that. I think the economy's humming along very nicely. Traditionally speaking, you would probably be looking to tighten the interest rate environment, not loosen it. But with the interest rate environment internationally, interest rates being so low, I think the Fed will look to conform to those rates, regardless of what our economy is doing here. So look for a 1/4 point cut. If we don't get a cut at all, we could see these markets pull back considerably, but I think that's unlikely to happen. So that's all I got for a market update.
Yeah. Well, I mean, and a lot of that is pertinent to what the fund is active in. I mean, because of the fact that we actually hold real estate assets in the fund, we are always watching those market changes, especially rates increasing and whatnot, because our business model and strategy right now is to fix and flip, and it does affect home ownership. And, we are mainly in a market that we are purchasing properties that are mostly first-time home buyer properties. So when you see interest rates raise or also cuts in it, it does affect what we're doing. So it's interesting. The market has definitely slowed down a little bit. We are finding that some of our properties are sitting a little bit longer than they were, this spring or early summer. But that's also, the time of year. That's pretty common. So it's important to watch those things as fund managers so that we can strategize and pivot and make changes in our marketing efforts and the way that we purchase properties and rehab them. So it all correlates to what we're doing here. So, but let's get to it. Let's talk about our fund. This is really exciting news. Eric and I are super excited about it. We've been waiting for this for a long time. As some of you may know, in the past, the ability to invest or deploy capital through our company has been mainly through two resources. One is through the notes. There is no requirement in regards to being accredited or having a net worth of a certain amount to buy a note. However, you do have to buy a whole note. And, although we do have minimum loan amounts of $30,000, we don't do a lot of those types of deals. I would say our average loan is about 70 or 80. So not everybody has 70 or $80,000 to put in a note. The other opportunity was to go into Fund 2, which is still open for those of you folks that are accredited. Fund 2 is wide open, still open for contributions. However, you have to be accredited. So it did have a big disconnect with a lot of our clients, a lot of people that have small IRA accounts, that want to be in that type of environment like the fund, but couldn't because they weren't accredited. Right. So we're excited. Our fund 3 is a Reg A fund and is one of the only in the nation that is a private equity fund. So we're super excited about it.
Totally. And, why, I guess the question is why did we go to the expense of forming a Reg A plus fund to bring private lending to the general public? Well, why would a firm go out of their way to do that? I don't think it's any secret to know, to just kind of see some of the wealthiest people in the world are behind large mortgage companies, large banks, financial institutions that make their money by way of lending money. There's an extreme amount of wealth there, right? And there's no coincidence that, there's a strong demand from the everyday investor to be able to participate in the loan market. But when you're working with, 10, 20, 30, 40, 50, 60,000, you're fairly limited historically in how you can participate in that environment. You can't play with the big boys. So this allows the everyday investor to invest as a lender, right? To be on that side of the table, but without taking on an inordinate amount of default risk. Right? Yeah, you can go be the lender for one borrower on one property, but if that borrower stops paying, guess what? Now you've got all of your money tied up in a deal that isn't paying. You've got to foreclose on the borrower. It could potentially be a headache. Could you make money throughout that process? Sure. But does the everyday investor want to go through that type of transaction? And the majority of the time, no, they don't. So this fund brings the venue for the everyday investor to be the lender, but not take on that substantial default risk that you would in the note business. And I think it's important to us we preach the circle of wealth, and we felt like if we're only bringing this to accredited investors and people that are already wealthy, are we really doing everything we can to make the circle of wealth, what it was intended to do, which was to make the everyday investor wealthy.
Yeah. So
that's my take on why we spent a year to make this happen.
Yeah. No, absolutely. I mean, I've been with the company 7.5 years, and in the past, it has been only available to the wealthy and the accredited investors. And so, like I said, there was a big opportunity for us to do this, to open this up to our students, our clients, our borrowers, our brokers. So we're really excited about it. It is called the Circle of Wealth Fund 3. It is one of a kind. We are very rare in the fact that we are a private equity firm that actually has a Reg A fund open to non-accredited investors. So this is super exciting for us. We're going to go over just a few things about the fund, and then we are going to get to our guest speaker that we're very excited about. So let's talk a little bit about the reasons to invest in a private lending fund. Number one, you're not the landlord. We get a lot of, at least in my history, I talk to a lot of investors that have owned rentals or they have fixed and flipped themselves. It's not that glamorous. Dealing with tenants and toilets is not that exciting. The fund gives you the ability to invest in that type of an asset class and be hands off and let us do the heavy lifting for you. There is monthly cash flow. Our fund pays out on a monthly basis. However, just so that we set everybody's expectations accordingly, this is a new fund. It's going to take a few months to ramp up. We need to get some notes originated through there, and we need to buy some real estate and fix and flip those to start seeing those profits generating through there. Returns can be in the double digits. We have historic average returns for our other fund of 12% and higher. Although past history is not an indicator of future performance, this fund will mirror that fund. It's going to be active in the same assets. It's going to originate notes. We are going to sell those notes off and retain an interest spread. So essentially, we are selling off the risk, and we're going to buy real estate assets in the Spokane, Washington, and Coeur d'Alene, Idaho market. And the business model or strategy right now is going to be to fix and flip those. Everybody needs to be mindful, though. The markets change. We may get to a point where we might find that it's more beneficial for the fund to hold some property. So that's something we meet on a weekly basis as fund managers, making those types of decisions. Number 4, you're supporting the housing market and the real estate investors nationwide. It's interesting. We have clients that have put money into the fund that are brokers of ours. And now they're getting the connections between the dots saying, okay, I'm going to broker more deals because I want the fund to be profitable and I want to help other real estate investors. This is a perfect opportunity to do this. You're building local economies. Your investment is backed by real estate, stocks and mutual funds and all those types of things are very volatile. Yes, the market can decline in the real estate market. However, there's a lot of different strategies. You can sit on real estate, you can ride it out, you could rent it. There's a lot of options. And then last, there's no shortage of demand. We are extremely busy. It's just exciting times with our company. We are hitting on all cylinders. Our COGO department is originating like crazy. We've got an awesome team of loan officers and loan analysts. Our BDCs, or our business development consultants, are preaching the Lee Arnold system of real estate. We're putting on 5 to 6, 7 events a month right now. So it's a great time to get involved with the fund. And I think that's also something that sets us aside. We aren't relying on other sources for our deal flow for our fund. Everything is very organic with our company. And I think that's something that's really important to point out is, we don't rely on other sources to send us deals to originate. We're creating those ourselves. And that's through our Lee Arnold system of real estate and then also through COGO.
And that's one of the risks in private lending. If you align yourself with a private lender that struggles to attract new deal flow into the firm, what they end up doing is they end up loosening their underwriting requirements and their LTVs start to creep up and up because they have investors that they need to answer to. And those investors want to yield. And if they don't have strong deal flow, they're going to create deal flow by loosening underwriting. That's something that we are adamantly against doing here. We have such strong deal flow where we don't need to adjust our underwriting requirements. We won't need to in a recession, in an expansion period, or a contraction period. And so I feel like that student component from the Lee Arnold system of real estate, that is in essence what really separates us apart from all the other private lenders out there.
Yeah. I go to a lot of events where we have booths and, their trade shows and whatnot. And that is a common theme that people ask me about our company is they're very fascinated by the fact that we have an education company and also an origination in addition to raising money and being able to deploy it. Because that's the biggest concern, right? You can go raise a bunch of money, but that's half the battle. Now you got to figure out how you're going to deploy it.
Right.
I don't see that as an issue for us. We have plenty of deal flow. So it's exciting. If you're interested in getting involved with the fund, again, you do not have to be accredited. The minimum to put in is $1,000. But so those of you folks that have an old IRA, I just had one of our staff come to me. She's like, I have had this IRA for 10 years. She has $3,000 in it. It's done nothing. This is a perfect opportunity to put that type of money to work. Minimum is $1,000. The tie-up period is for 1 year. You do have to stay in for 12 months. If you're interested, you can call Eric or myself here at the corporate office at 800-898-2717. Or you can go to our website. We have spent a lot of money and time and effort putting a website and a platform together to make it very turnkey and easy for you as an investor. Visit our website at Secured Investment Corp. I've got a picture up of it, and you can actually put your contact information in there, and it will actually walk you through making a contribution if you're ready to go. But if you want to talk to us more about it, we'd be happy to get on the phone with you and discuss that further. All right, so I'm super excited. This is a company that we, at least myself, has worked for quite some time, or with. I actually have my husband and my IRAs rolled over to them. But they're a company called Mountain West IRA. We've done a ton of business with them. We have a lot of clients that use them. They have wonderful customer service, very hands-on, extremely helpful, probably the best custodian that we've dealt with out there. And they were nice enough to get on the call with us today, or the podcast with us today. We've had, I don't know about you, I've had tons of questions about rolling over accounts in the last week since this fund opened. That is not our expertise. We're not tax professionals. So we thought we would bring the professional to you that can actually give you their expertise advice on that. So I want to introduce Diana Hoff with Mountain West IRA. Welcome, Diana.
Hi, Diana.
Hi.
Hi.
So happy you guys invited me over.
Yes, we're happy that you agreed.
You guys have really exciting stuff going on.
Yes, very busy times.
We do, Diana. Would you bring our listeners up to speed on kind of the process behind rolling over a traditional retirement account over to a self-directed?
Absolutely. There's actually two ways that you can move retirement money. It's either with a rollover or a transfer. Now, if you have an old 401k, 403b, some sort of qualified plan from an old employer, or even an employer you're currently with, sometimes they allow in-plan, in-service distributions. But if you have that sort of account, that has to be rolled over with a regular rollover. So that is not a like-to-like account. But if you currently have a traditional IRA, a Roth IRA, anything that's already got, IRA in it, you can transfer those funds really, really simply, and there's no tax penalty, no taxes, no penalties, anything like that incurred, because the IRS doesn't really care who holds your IRA funds as long as you're not holding them. So it's a really good way to take some of those funds that you have that are just sitting and not really doing anything. I didn't know how little my 401k was growing when I left one of my old companies until I was no longer contributing to it. And it sat there for 2 years before I realized that it had not only not gone up, but it had actually gone down.
Oh, wow.
So self-direction is a wonderful, wonderful way to really kind of actually have fun building your account. And it's much more fun to watch things go up at 8%, 10%, even, double digit, 12, things like that, than it is to hope the stock market goes up instead of going down.
That's a
but
really...
if you have...
Oh, sorry. Sorry, Dan, I didn't mean to cut you off, but that's a really good point. You led into something great there. So the differences between a regular retirement account and a self-directed retirement account, can you touch on the difference by way of like stocks and mutual funds? I feel like, most of our customers are probably, used to investing in mutual funds, and that's not what self-directed IRAs are all about. So maybe you could touch on that.
Right. If you have an account at a large firm like Fidelity or Charles Schwab, they're great. It's kind of like a crock pot. You set it and forget it. But the problem with that is if you're just in a mutual fund, it has a bunch of different things in it, and some of those can go up and some of them can go down. And you hope that the person who's in charge of that knows what they're doing and cares enough to keep on top of it, because sometimes those can go down. Everybody knows what happened to the market in 2008, 2009, and oh my gosh, that time there. A lot of people lost a lot of their money because all they had was invested in the market. The nice thing about diversity is you can play the market when the market's going up and down, but if you also have alternative assets, especially real estate or real estate-based promissory notes, things like that, that kind of gives you that protection, because a solid asset isn't going to go away, especially real estate. People always need a place to live. Mm-hmm. If you're in the stock market and you have a stock in a specific company, if that company goes bankrupt and goes away, so does that investment. It just completely goes away. If you have a solid asset like a piece of property or a loan that is backed with property, if the worst happens, you still have that asset. And even when we had the downturn, I had fix and flippers who decided to become holders, and they simply turned them into rentals because, like I said, no matter what the economy is doing, people always need a place to live. And they actually did really, really well and came out ahead when everybody else was suffering. So it's really good to have the capability of having that diversity, and it's absolutely amazing to be able to get in with only $1,000. I can't think of anyone I know who doesn't have a 401k or an IRA languishing away somewhere that doesn't have enough money in it to do that.
Sure. That's a great point.
So for someone who's not who's never had a self-directed IRA before, Diana, what advice would you give them? Or maybe the customer is nervous just because self-directed just kind of sounds kind of, hey, I don't want to mess my IRA up. What would you say to a new investor that might have some concerns in that regard?
Well, I actually had this conversation with my daughter the other day. She's in her first job. She's going to college, and she, well, obviously because I'm in the business, knows all about IRAs and that they are a good thing, and that's kind of most of her knowledge. But she also wanted to know how self-direction works. So I explained to her that if you have an idea, if you have something you know, if you want to invest in what you know, self-directed is good for you. If you can find something that you don't have to be the landlord, have someone change the light bulbs, things like that, then you want to find things like promissory notes, funds. The closest thing to set it and forget it is a fund. Basically, when you open a self-directed account, it's simply a different type of investment. All the rules are the same. All the protections are there that you would have for any other IRA. What's different is the type of account you have in it. And like I said, the IRS doesn't care who your custodian is. So you can go to the big companies, but they do those certain things. There's nothing beyond stocks, bonds, mutual funds, the things that they can just plug into a computer and walk away from. They don't have to babysit them at all. If you go to self-directed, because you have solid assets, it's a little more hands-on, and any type of IRA can be self-directed. It's not what type of IRA it is. A self-directed IRA is only different from a regular traditional IRA in that who the custodian is tells you what you can invest in. So basically what you would do is you would open up a self-directed IRA account. Then we would do a transfer, either a complete transfer, a partial transfer. If you just wanted to start out small, you could do that too. Then we move the funds, and that funds your account. Once your account is funded, then we simply do the paperwork to direct your investment. At that point, if it's not the type of asset where you're being the landlord, you can kind of step back and just watch it happen. And again, it's like you have invested and you're just waiting for the funds to come in. The only difference is the type of investment, but it works exactly the same way with all the same IRS rules in place.
Okay. So Dana, what happens if a customer has an IRA at one of the large companies that you mentioned, and it's actually invested in mutual funds, but they want to transfer the account to you and open up a self-directed IRA? What happens to those mutual funds or stocks?
Basically, what they would do is let the company know that they were going to be doing a transfer. They would liquidate those funds, although sometimes mutual funds are considered cash because they can take out a portion of them without actually having to sell a stock. But once you call them, you tell them how much you're going to transfer. They make sure those are set, and then you simply fill out paperwork with us. It's just a small 2-page document, and then we initiate the transfer for you. There's no fees on this side. Sometimes you will be charged a transfer fee, but that wholly depends on the company that you're transferring from. Sometimes they don't charge you anything. It really, really does depend on where it is right now.
I got you.
Then once the funds come here, we deposit them right into the account for you.
Understood.
And once the funds hit the account with Mountain West IRA and the investor has identified the investment they'd like to invest in, tell me a little bit about how they determine which form they need to fill out in regards to a direction of investment. Do they call you? Is that on your website?
Oh, we would walk them right through it. Normally, people know what they want to invest in, and if they're investing in real estate, we just send them step-by-step instructions with the real estate paperwork. If they're investing in a fund, we send them private placement paperwork. Our paperwork is not only really easy to follow, but if there's any trouble at all, we'll always walk a person right through it. That's one good thing about us. Even though we're nationwide, we have clients all over the nation and all over the world. If you're an American citizen, it doesn't really matter where you live, you can have an IRA. We will always walk someone right through it, and when you call us, you will always speak to a person. You won't have to press 1 for this or 2 for that.
That's great. I do think that, in the past, clients that I've dealt with, it is a little scary to them. I mean, I know we're familiar with the forms, but it is self-directed.
Right.
So that is the responsibility of the investor. And then once those forms are filled out, do they actually submit those to you folks at Mountain West IRA to proceed with the investment?
Absolutely.
Okay.
We can actually handle every step of the process. And then, for instance, if someone is doing real estate, we'll get in touch with their realtor and make sure that they know what is required for someone to actually purchase within their IRA. We'll talk to the title company and tell them how to vest it. And in just the same way, we can make sure that they have everything they need from like the fund they're investing in. Sometimes they'll need a piece of paper supplied by those people so that we have all the information we need. And then it's just a matter of filling out a brief direction of investment. It seems very scary at first because there's all kinds of new words, but truthfully, once someone has done it once, I've had people that I handheld through the entire process, and then they see something else they want to do, and they say, and all of a sudden a new direction of investment shows up in my inbox and said, hey, I want to do this. I just found this. And it's like, oh, well, okay, they know what they're doing now. It's only hard the first time, and we're here to walk people right through it.
Excellent.
Yeah, that's great. So one other question I would have, and maybe just a comment to make, not only can you help them with rollovers, but you can actually also help them set up new IRA accounts. Is that correct?
Absolutely.
Okay.
It's simply, we have a starter kit. You fill out the starter kit and tell us your flavor of IRA and who you want your beneficiary to be. And then once that's done, we just fund the account with either a transfer, a rollover. They can even do a contribution.
Okay.
The nice part is if they're doing things in a Roth account, all the profit that is made is growing tax-free. Because a Roth is an after-tax vehicle, you can start with $1,000 that you've already paid taxes on, and over time that can grow to be, whatever it grows to be, but you'll never have to pay taxes on that money again.
Oh, that's great. Yeah.
Excellent.
Yeah, that's really good information for our clients. So tell us this, if they want to get in contact with you folks, how can they go about doing that?
Well, they can always go out to our website, which is mountainwestira.com, or they can simply call and ask to speak to someone on the business development team.
Okay.
They can ask for me, Diana, one of our Megans, or Bianca.
Okay. And I've put their contact information up on the PowerPoint for those of you that are on the podcast. You can see that there. If you miss it, also call Eric and we can get you the information too.
We can. Thank you so much, Diana. We greatly appreciate you being on the call today.
Absolutely. Thank you.
Thank you, and good luck.
All right.
Thanks. We'll talk to you soon.
Bye-bye.
Bye now.
Bye. That was great information.
It was.
I don't know about you. Yeah, I've had a lot of questions lately, and they're great questions, and I just think that this fund is perfect for these types of accounts. I have to tell you, probably 95% of the clients I deal with have some form of a self-directed, either IRA, 401k, something of that nature.
Totally. I mean, how many clients have we talked to that have 2,000 here, 1,000 here, 5,000 here? It's either all in cash or it's in one mutual fund that's just a dud. Mm-hmm. Take stock of what you got. If it, sometimes we just don't even want to look at the statements. We don't want to deal with it. Take stock of it. If you've got some accounts that are underperforming or you're just generally unhappy with their situation, give us a call. Let us know what you got going on, and we'd be happy to assist you.
Yeah, absolutely. Again, our number here at the office is 898-2717. Eric or I can both help you with this. Get involved. You have to do something. That's the first step, is taking action.
I agree.
And again, Mountain West has been wonderful to work with. They will hold your hand through the whole process. I can't speak highly enough of them. They've been wonderful for our clients. So let us know what we can do to help you. But again, the first step is taking action and getting involved. And we'd love for you to get involved with us in our fund. So please reach out, and we'd love to help you.
Thanks, guys. Have a good day.